What's up, everyone? Today is November 22nd, 2021. My name is Keith, and in this video, we'll be going over the broader markets, not just looking at cryptocurrencies. We'll take a look at Bitcoin. We'll take a look at the dominance of Bitcoin, taking a look at the altcoins market cap, the total three. But we always like to look at the broader markets in these videos, looking at the stock market, looking at the volatility of the S&P 500, basically the 500 largest companies in the US. And we also like to look at the US bonds. So we like to take a look at the 20-year bond as well as the yield. And we'll also dive into the shorter term bonds, looking at, I believe, the 1 to 3 year, as well as the 10-year yield for the US Treasury. So thank you very much for tuning in, and we'll jump right into it here. We'll first take a look at the S&P 500 because I think this is pretty correlated with the small dip that we saw within the world of crypto recently. So that is where we're going to start off with here, looking at the S&P, and then we'll jump into the volatility index soon after. So before diving into the price action, there was some news today. US President Joe Biden has chosen Jerome Powell, good old J. Powell, before Lael Brainard, which was the other leading candidate. And I think the reason why we did have a pretty decent dump to the downside isn't absolutely massive, but obviously we did see some sell pressure. We did see some bears coming into the market, and it's mainly because Lael is a lot more dovish in terms of the monetary standpoints that they really have, or that she really has. So I'll give you a couple of examples, and for those that are unaware, dovish means that, for example, Lael is more favoring stimulus, lower interest rates, and running the economy hot, compared to, let's say, like Jerome Powell isn't hawkish at all, but someone who would be very hawkish would be thinking about raising interest rates, reducing stimulus, reducing the amount of bond buying, and basically reducing the amount of capital that is being printed in order to stimulate the economy. So a dove would be someone who is running the economy hot, and then a hawk would be someone who is worried about too much inflation. So Lael is definitely a lot more dovish. And to go over some of the examples, she said that, or individuals said that she's a lot more inclined to use regulatory tools to heed off financial situations, let's say like asset bubbles, a lot more than Powell would. So that's pretty interesting. And she also exhibited a greater willingness to adopt a central bank digital currency. And she's also more notable in terms of the push to get high employment, or as much employment as possible, and basically reducing keeping consistent with the amount of bond purchases instead of reducing the amount of bond purchases that we're currently seeing under Jerome Powell. So there was two real options. Jerome Powell was a little bit less dovish, where Lael Brainard is a lot more dovish. So with increased dovishness, you're going to get higher inflation because the economy is going to run hotter, which then the market would enjoy because a lot of money being printed is going into the financial markets, which is inflating them, and investors are going to be a lot more appreciation, and they're going to be more happy because things are seemingly more bullish. It's just the value devaluating, but that's a whole other subject in itself. So the fact that Jerome Powell did get elected is a little bit of bearish news in terms of the doves in the market, but I don't think this is long-term bearish news. Like, for example, the Evergrande situation, that still could turn into something a little bit more devastating, but right now it's kind of halted. Not really seeing a whole lot of Evergrande news in the news too much right now, but that is still kind of looming in the background. But for this specific event where the Federal Reserve Governor is chosen to be Jerome Powell again, I don't think this is long-term fundamental shifts in the market. This is just a little bit of market reaction, wishing that there was a elected individual who's a little bit more dovish, although we're basically at like MMT right now, modern monetary theory. We're printing a lot of money, but the market wished that they had an individual, which is Lael Brainard, who would be even more dovish. So that's basically the backdrop of what we're currently seeing right now from a fundamental standpoint, in my view. Now we'll get into the price action here. So we'll stick to kind of larger time frames throughout this whole video. So we did hit our major target within this descending channel right here. Let's quickly talk about what happened here. I'll just do a quick print screen, and then we'll be able to discuss the price action that we have basically for kind of this Q4 here. So this is the descending zone that we've been talking about right here, the descending channel. We did get a nice squeeze with a symmetrical triangle, as we can see right here, and then we were squeezing, and the volatility contracted, squeezed, and at some point it did break, and we can see a very clear injection of buy pressure to initiate the next wave of momentum to the upside. We saw that huge push to the upside, and then similar to what we saw with BTC, the S&P 500 is a little bit more ascending, but you see these ascending wedges, and there's a couple of ways that ascending wedges could potentially play out. The first option is if you get a break to the upside, but the higher probability that we're seeing more recently is a break to the downside, as we can see like so, and that's exactly what happened for Bitcoin and a lot of different alts within the alt market, and that's kind of what we're seeing right now. So I wouldn't be surprised if we do get a small move to the downside. If we take a look at the smaller time frame, we do see a descending series of lower highs there that could potentially create a zone of confluence for the support, and we always see a nice ascending zone for this expanding microphone or expanding wedge formation. So we are increasing the volatility, which isn't fantastic, but it could just be basically waving off, kind of just moving sporadically, moving aggressively to get all the weak hands out, to get all the basically the momentum shaken out from this big move before we start the contraction phase again. So sometimes at the end of the final move, the final push, you do see an increase in volatility, and then you kind of get that capitulation event where it either breaks the descending zone or it starts to contract again, and that's going to be a start of a potential expansion phase, because we always see a contraction before a major expansion. So what potentially could be playing out, I know I'm talking quite a bit here. So right now, in my view, we are seeing an expanding megaphone, which we can see right here, after we've broken out of an ascending wedge. So we were squeezing up within this ascending wedge, we're breaking down from this descent or from this ascending wedge to the downside. I think the potential low for support, if we start to just basically continue the overall momentum bearish, would be around 4650, 4640 for the S&P 500. And then from there, we'd be looking for some sort of squeeze, some sort of maybe descending channel, descending wedge. So then we're able to contract that volatility again before we get that next leg higher. So as of right now, I'd be a little bit hesitant on increasing exposure for risk on assets because the S&P does look a little bit weak. We'll also take a look at the NASDAQ, which doesn't look too phenomenal either. So we'll take a look at that a little bit after, but that's basically my view of the S&P and the broader market for stocks, for US equities. And then to get a little bit more granular, we can see first support, second key level of support, and then we have an unvalidated descending support. So I'd need to see one more validation of this descending support in order for me to call it a valid support. But we do have confluence within this previous level of support, resistance, new level of support. And if we zoom out a little bit, I did remember, I guess it was right here. This was the first target for this major zone. So we just hit the target right here, the first extension of the 61.8 fib level. And this is the target for the geometry of the structure that we broke out of. So the zone of buy pressure, in my view, would be kind of around here to here. So if we're looking at it from a price range standpoint, let's just get a rectangle, it's going to be somewhere around here to there. So my key level of support is going to be around 4630 to 4615, somewhere around there. And then we'll be looking for possible buy pressure coming into the market. We'll be looking for smaller price action reversal formations right around that zone there. So as of right now, I don't mind if it's falling a little bit, if it's plummeting, even if it's plummeting to around this key level of support right here, because I do see a lot of confluence there. And with the fundamental news, I don't think it is long term. I think that we will still see the momentum continue to the upside after the market basically just accepts the fact that we're going to have Jerome Powell for another 4 years. So that's going to be the S&P. We're going to take a little bit of a quick look at the VIX, the volatility index for the S&P. This is just the 2-day chart here, quite large in terms of the time frame. So we're basically just basing out after this massive push to the upside that we saw from the COVID crash. The volatility spikes when the S&P drops. Hopefully everyone understands what this instrument is kind of used for in terms of how we like to use it to assess sentiment in the market. Basically right now there isn't a ton of fear in my personal opinion, although we have broken above this slight ascending zone. We have yet to break the previous high, so let's just quickly get our brush. We see this high right here. We see this lower high right here. We have yet to break the series of lower highs, so I'm not too concerned. Even if we do get a little wick to the upside, we have seen sell pressure push the price of the VIX back down around the 20-ish range, $20 range. So I wouldn't be surprised if we get a big spike to the upside. We get a nice wick to the upside here, and then the body of the candle on a large time frame is closing a little bit lower here. So not a huge amount to worry about for the VIX as of now. We see lots of sell pressure within this zone of confluence. If it does break above 20 and it starts to trade right around this range and higher, that'd be a little bit of a worry. If it starts to break the 25 range, that would be a big worry because we're in a structural zone, as we can see right here. So ideally, we'd like to see the price trade continuing to move to the downside. If it does start to trade and break the $14 range, that would be absolutely phenomenal. But at this point, we're kind of at a base where we're not really going to decrease in terms of the volatility that the S&P has, in my personal view. So we're just looking for it to spike, have lots of wicks to the upside. Bodies of the candles are closing as low as they possibly can, and we're seeing a descent soon after a big spike, because big spikes, meaning the VIX is increasing in price and the S&P is dropping, are inevitable. You're not going to have a straight line going from point A to point B within a stock market or really any market. So you need to have the ability to basically move beyond these smaller dips. So if you're leveraged by like 5 times, 10 times, you may not able to really accept the 5% dips or the 10% dips. So it's pretty important. It's inevitable. So look at larger time frames. As the VIX is looking right now, it doesn't look like there's anything catastrophic in the midst, but definitely keep that in mind if you are leveraging there. So that's my view of the VIX. Nothing to worry about. 20 is going to be a key level of resistance, and it'll be interesting how the rest of the week is going to go for the VIX. If it starts to spike, we'll see the S&P drop to around 4630. Ideally, we'll see the VIX not go beyond 20, while the S&P doesn't go beyond 4630 to 4630. 4620-ish would be the key zone that I'd like to see the price stay above for the S&P, and for the VIX, it would be below 20. So that's going to be my view of the kind of broader risk-on assets, the S&P, the VIX, and now we're going to look at the NASDAQ as well as the... Let's take a quick look here. The 1 to 3 year Treasury bond. So this is the value of the short-term bonds for the U.S. Treasuries, and this is going to be the yield for the 10-year bond. I couldn't find one for the 1 to 3 year Treasury, but we did find one for the 10-year, which is a little bit shorter than the 20-year that we normally look at. And this is the price of Bitcoin. You see the Bitcoin commitment of traders, the COT data, which is right here, and this is the hash rate. So we'll first talk about the Bitcoin COT data, which does look bullish. Hash rate doesn't look beautiful, but the hash rate and the price of Bitcoin are pretty well correlated. So that is not too much of a worry, but we'll first talk about the Bitcoin COT data, the commitment of traders. There is more data that does come with the commitment of traders, but for this specific indicator, all I did is strip everything off and add in the 4 largest buyers and the 4 largest sellers. So the red is the sellers and the green is the buyers. And we see a flipping yet again, where if we zoom back out, we haven't really seen the buyers go above the sellers. We've seen points where the delta is very small, meaning the difference in price between the sellers and buyers is very small. So that's a good indication that sellers are reducing and buyers are increasing, which is a really good environment to look for longs, because if the 4 largest buyers are increasing their buying and the 4 largest sellers are reducing their selling, that's just overall great for the market. Reduction in supply, increasing demand. That's pretty easy to understand how that would be good if you are a long, if you're an investor, if you're a buyer. As of right now, we've seen recently a flippening. So the indicator previously was to see a low delta, so to basically see a contraction or a reduction in the sellers and the buyers, but we actually saw the buyers overtake the sellers, and we haven't seen that in a really long time. and we finally saw it right here, and then it flipped back. So it went back where the sellers are above the buyers. But then yet again, in the most recent data that we got for the commitment of traders for Bitcoin for the Chicago Mercantile Exchange, we see the buyers flip the sellers yet again, indicating that the 4 largest buyers are increasing buying and the 4 largest sellers are reducing their selling. Not by a lot, but still you do see that data come in, and it is still pretty important to understand in my personal view. So that's, in my view, just from the Bitcoin COT data, still looking very bullish from a institutional level. Now, keep in mind, this isn't like a very small time frame indicator. It is used for large time frames only. You only get the Bitcoin commitment of traders data once a week, I believe on the Friday. So it's not something that you should action immediately. It's not like a RSI where you change the time frame and it changes the calculation for the RSI. It doesn't really work like that. Next thing we're going to be looking at is the Bitcoin hash rate. Keep in mind that you do see a pretty high correlation between the Bitcoin hash rate and the price of Bitcoin. You do see a little bit of a move to the downside in the hash rate, but nothing really too much to worry about. We have seen these dips in the past, and they haven't really done a whole lot. The most recent massive dip that we had was the Chinese exodus of Bitcoin miners. Hopefully, if you were in crypto, you understood there was a lot of FUD going around there. Now that they have all moved, like for example, if they moved like Kazakhstan, Iran, all these different places, some people I'm sure even went to the US, you did see a pickup in the hash rate and miners come back online, which is fantastic. And although you do see a slight dip, you're not really seeing that massive sell-off, and there isn't really major news in the China front that I know of recently with miners needing to go offline and change locations or anything like that. So in terms of the fundamental news, don't really see anything correlated with the hash rate, so that's really good to see. And overall, it does look pretty good in terms of the momentum that we're seeing and the pickup of the miners getting back online from the Chinese exodus that we had back in the summer of 2021. So we're going to take a quick look at the NASDAQ. Let's just zoom right out here. And let's just talk about the structure that we broke out of. So this is the same time frame for the structure that we broke out of for the S&P 500, and we were able to hit basically the exact same target in terms of the 61.8 extension from this geometric target that we are, the geometric price target that we have from the structure that we broke out of. So if we just take a quick look at the S&P, this is the first 61.8 extension, and then if we're taking a look at the S&P, you also see that this is the first 60, and then this is the second one right here in confluence with the other one. So you do see they are pretty well correlated in terms of the structure, the wind up, and then the explosive move after the wind up, and then you're seeing a nice little blow off here after it hit its first target. You do have targets a little bit higher on, but it does make sense in terms of the market having to have some sort of pullback, and there's no better time than basically just trying to connect some fundamental news that happened with Lael Brainard not getting selected for Federal Reserve Governor. Federal Reserve Chair, did not get selected for Federal Reserve Chair because Jerome Powell got another 4 years. So in my view, that's why we're seeing a little bit of a pullback here for the risk on assets in the US. In terms of supports, I do think around $1,600, you see a first target right there. And then if you zoom in on a smaller time frame within this nice little squeeze here, you do see previous level of support, resistance, resistance, or resistance turned into support again. And it's also the apex of our symmetrical triangle, which does have a valid and it does have some validity for the actual price area because it's contracting right at a key zone, right at a key level. So we could extend this a little bit higher if we wanted to, but as of right now, my view of the risk on assets is primarily focused on the S&P, and I think NASDAQ will pull back a little bit. They are pretty highly correlated. It's not absolutely perfect, but they are going to be moving in similar directions for the trading of the market hours, in my personal opinion. So as of right now, there's not a whole lot of information that I'm going to be able to provide other than looking at the S&P, and that's going to be a gauge for the risk on assets. And then I wouldn't even be surprised if it does pull back to like 1,600, as long as we're kind of holding these higher lows. As we can see with the brush, you see a nice higher low. You see this higher low right here. Even if you get a little bit dip, that's not so bad. You see a nice series of higher lows, and then you could probably get some sort of channel like so, and then you could start to break out of that channel, and then it's going to be continuing to move to the upside because stocks only go up. So that's going to be my view of the S&P 500 here. And let's move on to the treasury bonds. So as you can see, during the COVID crash, the value of bonds, not the yield, but the value, went up very aggressively. And it kind of makes sense. US bonds are extremely safe. They are very risk off. So when there's fear, uncertainty, worry in the market, investors flood into safe, conservative investments like purchasing US bonds. So since then, since COVID, we've seen a depletion and buy pressure in these US bonds, and the shorter time frame is going to be more volatile than the longer time frame. And we did see a nice descending channel break to the downside, retest the previous support for a new level of resistance, and create a lower low recently for the 1 to 3 year treasury bonds for the US. So that's really great to see, because this is indicating to me that we're seeing a continuation of the risk on sentiment. If we're seeing the US bonds move to the upside, and let's say it broke to the upside and we start to see it break like 86, 87, that would be quite worrying, because if we see the stock market start to fall, we see some fundamental news coming in, and we also see the US bond market kind of flashing or indicating that it's kind of shifting into a risk-off sentiment, that would definitely give me a little bit of worry. But in my view, the US bonds are pretty clearly indicating that we are still in a very risk-on environment. So that's what I'm sticking to. I'm kind of sticking to my guns in terms of the risk-on environment. Bonds are looking phenomenal for risk on, with the US bonds moving to the downside, recently breaking out of a structure. And then we'll also talk about the US bond yields. This is the 10-year US government bond yield. We usually look at the 20-year bond in yield for the US government treasuries, but we're just looking at a smaller time frame because they're a little bit more volatile. And this does look very similar to the 20-year US bond yield, but it does look a little bit more peppy. It does look a little bit more chipper in terms of the bullishness. We already broke out of a nice descending channel that was squeezing the price with a descending zone and an ascending key level of support within a zone of confluence here. We broke, and then now we're retesting the previous key zone of supply and resistance as a new level of support, and it just looks absolutely phenomenal. I do think that yields will continue to rise. We're seeing a little bit of hesitation here around the 163 range, but I think once it breaks around that 1.7, like as you can see, you got a lot of resistance around 1.7. If you, let's say, take it back to the weekly chart, you see a lot of hesitation even back in like March 2021 in the spring there. You see it hit again in October really recently, and now we had a nice pullback, and we're making that basically third attempt of breaking 1.7% for the US 10-year yield. So it'd be interesting to see if it does start to break to the upside. My view is that US equities will be booming, NASDAQ will be exploding off the roof, and cryptos will be doing phenomenally well. Remember back in like mid to late 2017, I think that's how the market will be in terms of the sentiment, in terms of the bullish action, in terms of the buy pressure coming into cryptos and speculative assets. I think it would be a great environment to look for longs, and to put simply, to be somewhat irresponsibly long, as Lael Powell from Real Vision states. So that's my view of the US bond market. It does look pretty strong. It does look really healthy for risk-on assets to continue rising. I don't really see anything from a technical level that indicates that we are shifting into a risk-off sentiment. As of right now, it's looking pretty solid. So that's going to be my view of the kind of shorter-term US bonds and US yields. We'll now switch our gears, move on to the world of crypto. So let's open up BTC here. And let's just discuss what we're currently seeing within the 4-hour chart. Let's just open this up right here. Actually, I'm just going to quickly change the volume that we have. And if you don't know, this is the average volume for all of the major cryptocurrency exchanges for retail. Add them all together and then divide them by how many there are, and this is what you get for your average. So instead of just looking at a single volume set of data like the Binance data volume or whatever exchange you're using, you're able to have a better understanding of the broader market volume by comparing them to all the different exchanges that retail traders use. So definitely a good thing to have. You can find it within our TradingView profile there. So first thing I notice is you see a reduction in sell volume. That's great to see. You don't see a tremendous amount of buy pressure coming in, but you do see a block of buy pressure right there, and then you see an increased amount of buy pressure right there. Nothing really fantastic. I do like to see at least 3 or 4 kind of injections of buy pressure, where right now you get your first injection of buy pressure here, within this low, and then you get your second injection of buy pressure here within this low, and then ideally you're able to get a third injection of buy pressure that is increasing. So at that point you're seeing increasing buy pressure, decreasing sell pressure, and that's a really great environment for Bitcoin to do well. So as of right now, what we're really looking for in terms of the volume is to see basically a capitulation of sell pressure, which we had here, and a basically softening of the bearish momentum through looking at the volume. So VSA really, in simple. And we are seeing that right now. It hasn't really come to fruition yet, but if we are able to hold this key level of support, it would be looking absolutely phenomenal, especially if we're able to get like a nice big wick to the downside. We see a big bullish engulfing candle. That would look absolutely phenomenal. And then combine this with like a lot of buy pressure. You see increasing buy pressure, decreasing sell pressure. That would be an environment where I'd be looking for potential reversals for Bitcoin and the broader cryptocurrency market. So that's just talking about the volume. In terms of the actual price action, we have an unvalidated descending trend line there. You got your first touch, you got your second touch right there, but it is unvalidated because we do need 3 rejections of a resistance zone or a support zone in order to actually use it within our structure. So that's still unvalidated, but we do have a valid descending zone, and we see our first touch right here. We see our second, third, fourth, fifth. So lots of validations for this level of support. So I'm kind of viewing the chart of Bitcoin as an expanding wedge with a key level of support. It would be awesome if we are able to hold this key level of support, because then we'd be squeezing from this level of support in this descending zone. So then the price would be contracting within this area, and then what we love to see is contractions, because after every single contraction, you do see a nice expansionary phase that the market is able to take on. So as of right now, I'm going to be remaining a little bit more patient. Like I did say with the US equities market, we could see a little bit more of a sell-off because hopefully you recall what we talked about with the S&P. You just broke out of an ascending zone. The target for this ascending wedge, just looking at the geometry, would be the zone of confluence that we already talked about, the 46.25 range. So it is lining up for a little bit of a move to the downside due to this Fed news, with the chair not being as dovish. But I don't think it's going to be long lasting. So even if Bitcoin does move to the downside one last time, Nathan was already talking about the key level around 50 to 52K being a major level of support. We'll take a look at the daily as to why this is such a major level of support. And let's just quickly do a quick print screen here. So if we do get that last final dump to the downside, why is this such a key level of support? We see this key level of resistance turning into a new level of support. We see this ascending zone turn into a new level of support. And you also see this horizontal zone turning into yet another additional layer of support. So lots of buy pressure around the 50 to 52K-ish zone. So if it does dump all the way to the downside, I will be looking at this range for potential reversal formations, whether it be a hammering out lows for a descending wedge, whether it be a reverse head and shoulders, whether it's just a simple horizontal channel that's just going to break to the upside after pushing up enough times against the resistance. We don't exactly know, but we will be looking for reversal patterns around 48 to, let's say, 52, 49 to 52K zone there. But it hasn't broke yet, so I don't want to jump too far ahead of myself. But even if we do dump below where we currently are within this low right here around 55K, I am not going to suddenly turn bearish. I am remaining I'm going to keep my high conviction, I guess you could say, and high confidence that the continuation of this bull run will push forward here to many people's fruitions. I think it is going to extend. We have been talking about it extending for a little bit longer, and I think it actually will. To how many months, we don't exactly know, but it does look like we are going to see a slight extension for this current bull run compared to what we saw in, let's say, for example, 2017, when kind of late December was when Bitcoin started to peak, when it was going parabolic, and then altcoins peaked, let's say, 3 weeks, a month later, depending on which alt you're looking at. So that's going to be my view of Bitcoin. Let's zoom that out. A little bit of good news on the crypto side is the Bitcoin dominance chart is still dropping. That's fantastic to see. We had a nice correction from the dump that we had from October 19th to November 6th. We had a slight correction with an ascending wedge squeezing, creating slightly higher highs, higher lows, but we did get that big bearish candle on November 18th, just a handful of days ago, and now it looks like we are going to be able to break that 42 level that has been holding us since early of this month, November. So it's looking pretty good for the altcoins. Like some of the coins that have been doing really well are CRO, AVAX, Sand, other metaverse projects that have been doing exceedingly well compared to the rest of the broader market. But we do need to consider that final little sell-off before we assume that the rest of the cryptocurrency market is going to catch up with some of these high-flying alts that have shown extreme relative strength during this portion of consolidation for many alts here. Don't need these two lines. Don't need that as well. So that's my current view of the BTC.D chart. I do still think that we are going to be breaking the 39 range. Let's say 40 to 39 range, because we have been seeing that as a key level of support, not able to pass yet. We actually were even forming a higher low from this low that we had back in May of 2018, but I do think that we are eventually squeezing and forming that next drop to the downside where altcoins are going to be doing exceedingly well compared to Bitcoin. Bitcoin will be appreciating, but altcoins will be appreciating at a much greater rate. And because there's so many more of them, it just makes sense that Bitcoin is going to be dropping in dominance when you have all these different altcoins that individuals can select from versus just the single Bitcoin that people can purchase to increase the dominance for Bitcoin. So pretty good to see. I definitely am not like 100% bullish, just because with how the overall broader market looks, with the S&P and the NASDAQ looking like it's going to take a little bit of a rest, but overall it does still look like the crypto market is chugging along, especially with some of the altcoins that we talked about. CRO, absolutely high flying, almost at $1. I think it hit like 73 cents. Sandbox is doing really well. And AVAX, probably the best layer one that is performing as of right now. So the last chart we're going to be taking a look at for crypto is going to be the total 3. We did talk about this previously in our previous video, but this is going to be the entire cryptocurrency market cap excluding Bitcoin and Ethereum. So if you were able to see that photo on our Discord, it was a comparison of all the different layer ones in Ethereum, and you can see just how big Ethereum's market cap is compared to the rest of the layer ones. Even like the second largest, like Binance coin, Ethereum has a huge leg up in terms of the market cap. So taking those two out, you do get a better understanding of the speculativeness of the cryptocurrency market, which is, in my opinion, a really good thing to understand. So as of right now, we are still holding the previous key level of resistance, and we just slowly squeezed up higher, and we finally broke out. We were able to hold on a large weekly candle, and we're pulling back to the $1 trillion range for a new level of support, and I think we're just holding this before we're able to launch up higher. So although we are not moving up yet, it does look very promising for more speculative altcoins in the cryptoverse. So let's just zoom that out. And that's going to be my overall view of crypto. And then we'll end off with FX because this is a broader market overview. And we'll take a look at the US dollar, which has been doing exceedingly well. And I think this also is giving a little bit of a negative impact for US stocks, because if the US dollar is increasing substantially compared to other currencies, it's going to be harder for exporters to basically sell their goods, because it's going to cost more money for people to purchase them that are overseas. So ideally, you're not wanting to see the US dollar increase relative to other currencies too much. And the fact that we are seeing the US dollar increase substantially compared to basically every single other currency is not great for international corporations. So in that said, definitely something to keep an eye on. It did break a major level of 94.5. So I do think we are going to be having to basically move up with a little bit of headwind, not tailwind, because if the US dollar is dropping, similar to what we saw after COVID, this is really great for risk on assets. It's great for oil. It is great for crypto, because whatever you're comparing crypto to if it's moving down, even if crypto remains absolutely still, it's going to look like it's appreciating, even if it's a little bit, because what you're comparing to, the value of it, is moving to the downside. On the contrary, if you are comparing something and the value of the asset that you're comparing with is increasing in value, the asset that you're comparing the dollar to is going to be looking like it's dropping in value, even though the actual asset could be remaining exact same in value. If the dollar is going up, then it's just harder for that particular asset to move up as well. And obviously, it's not comparable if you're comparing like Solana that can move up 100% or 25% in like a week compared to the US dollar, but there are headwinds that we are currently facing with the US dollar moving to the upside. And the fact that we've just broken a major technical level at 94 definitely gives me a little bit of a worry that we are going to be seeing this headwind for an exceedingly long amount of time. So not great. Doesn't mean that we can have a bull run, that we won't have a bull run, but the ideal situation would be if we saw a weakening dollar as well as a risk-on environment. But you can't ask for everything. It's just something to keep in mind. If we see this just continue to move up, just go parabolic, that's going to be pretty worrisome for the overall risk-on markets in the traditional markets, the trad markets, which are basically like the S&P, NASDAQ, Dow Jones, stuff like that. So definitely keep that in mind. But as of right now, it's not looking too crazy. I think it'd be great if we did see a slight pullback here to around like 94, 95. That would be ideal, but not sure if that's going to happen. So definitely something to keep in mind, and definitely keep a chart up of the DXY, which is the US dollar currency index. And if you don't want to look at this one, if you actually want to trade it, Euro USD looks very similar, just flipped, because I believe 60%-ish of the DXY is comprised of the euro. So just check out the Euro USD chart if you are looking to trade basically the DXY. Not really going to dive too much into the 20-year bond and the value of those bonds, because you already talked about the smaller short-term bonds and the yields. So what we'll end off with is taking a quick look at the relative strength of the currencies that you see, the major currencies right here, or the major currencies pairs. Just pair all of them with JPY, which is always at the end, and you'll get a pretty easy to understand relative strength weakness indicator tool for the FX markets. So surprisingly, well, actually kind of unsurprisingly right now, the US dollar is doing absolutely phenomenal, and every single other currency is not looking phenomenal. This can imply a potential risk-off sentiment, because the assets or the currencies like the US dollar, Japanese yen is going to be considered risk-off, and then currencies like the Canadian dollar, Australian dollar, New Zealand dollar, these are going to be currencies that are more risk-on. But overall, you're kind of moving in tandem, and then the outlier is going to be the US dollar. Let's just see if we can identify anything within a smaller time frame. We got GBP, which is kind of in the middle. It was the world reserve currency at one point. It was the dominant currency, but now it's kind of faded back. It is actually the longest standing fiat currency at like 300 years old, which is not long at all. 3 generations is pretty unbelievable for the longest fiat currency. But anyways, just continuing on with the overall analysis here. Some of the things that have been doing really weak is the New Zealand dollar. Euro has been doing really weak, which kind of makes sense. The euro and the US dollar is kind of like a seesaw to some degree. But you do see more speculative risk on currencies like the New Zealand dollar and the Canadian dollar not do phenomenal. But this is just comparing against other currencies, so it's not like it's the end-all be-all. So it's just something to consider, not looking 100% risk-off or 100% risk-on in terms of the relative strength-weakness analysis that we're able to generate using these different currency pairs. So that's going to be the end of the video. Thank you very much for tuning in. If you do have something that you'd like me to check out, please let us know. If you haven't already, definitely join our Discord. We talk about a lot more kind of nitty-gritty stuff in terms of the altcoins that we're scoping out. Just as a quick overview, we talk about some of the metaverse coins that are just absolutely pumping. Like, for example, this is the Sandbox, just absolutely mooning, looking very phenomenal. We do talk about this in our Discord. Decentraland is looking very solid as well. MetaHero is one that has a lot of ambition, still super speculative, but definitely something to check out. And then Polka City is one that's pretty interesting. It's kind of looking like GTA for a metaverse where like you're able to own taxi services, casinos, restaurants, gas stations. You could drive, you could build your own city, you could buy land. So it's definitely something very interesting. So if you haven't, please check out our Discord. We're pretty friendly, or I'd say we're very friendly. We're Canadian. We like to say hello. And you're able to kind of ask questions, simple, difficult, complex. There's a lot of pretty smart people in there. So definitely check that out. So thank you very much for tuning in. That's going to summarize the overall broader market overview for this week's episode. Thank you very much for tuning in. And until next time, have a good one, traders.